Hello, Ashwin. Welcome back to TikTok.
Hi.
This is a channel where we talk to investors about potential and opportunity, possibility. And I've got some great news to share. Nomura says they believe all Asian central banks are done hiking rates in line with the deep slump in exports and easing inflation. How good is that? After all that chaos and all that, like, we don't have any control over what's going on, this is the news.
See, this is what I've been telling our investors. I know you are impatient. I know you are restless, but please be patient because it will eventually have to come to an end. Now, let me tell you what's happening
About
right
time.
now. FX swaps from Malaysia and South Korea to India and Indonesia, okay, including Thailand, are already signaling a 25-point rate cut over the next 12 months.
You know, Malaysia just increased rates, right?
Yes,
just
I have
about a
no
week
clue why
ago.
they did that. It's like, to me, it's like, aha, moment. I'm also doing something. But if you want to ask my opinion, I think it was totally not. There was no use. You know,
Malaysia was blindsided.
Such a rate hike was no use. Why I say no use? Because the only people who benefit from such rate hikes of 0.25% are the banks. So when the rates start being cut, then it was all a point, to me, my opinion, it was all a pointless exercise.
Okay.
Yeah.
Well, we think so. So please carry on. You know, how do we make good out of this news?
So once you see that rate hikes are coming to an end, this is now finally the time to start buying quality Asian companies. And believe me, there are a lot of exciting Asian companies that our investors have already bought since last year in May. One of them,
Asian companies.
Yes, and one of them has climbed more than 47% in value since last October. And this is a recession-proof business. I will not elaborate further. If you want to know more, you have to call us up. So it's time to start buying quality Asian companies, which are incidentally recession-proof, okay? And you can buy these companies, again, two ways. 5% below the market price, and you can also buy them by just paying 20% upfront. No need to pay the whole amount, okay? There are two ways of doing this. Now, secondly,
two strategies.
Yes. Now, secondly, passive income. A managed fund that trades FX and gold volatility. Notice I say volatility, not market direction. It pays out a base case scenario of 8% every single month, which translates to 2% per week.
I'm not sure if I'm hearing you correctly.
I'll repeat that.
8% a month.
And that translates into 2%.
The banks are giving me 4% a year.
Okay, let me tell you why. This fund only trades FX and gold volatility, and FX is a 7.6 trillion market per day. Now, when you talk to your bank, they will say, no, Chelsea, don't do FX because it's risky. I understand. I agree. But in this case, this fund is managed by professional traders who trade for you. And they have
more. You say the word FX and everybody goes, oh no,
high
risk.
It's
too volatile, it's too risky. And this now you're saying FX trades volatility. It's like a double whammy.
It's a managed fund, managed by professional traders, more than 20 years experience, and they are giving 2% per week.
Wow. So I'm thinking that because the market has been volatile, what with interest rate hikes and inflation and the Fed speaks,
yes,
they've been raking it in.
Yeah,
if what you say is true.
Yes. See, the normal man, when volatility comes in, stock market drops, the normal man panics. But professionals know how to channel this volatility into another instrument such as FX so that you can make money. It all depends how you play the game. It all depends how you skin the cat. So stock market is not moving. Stock market is going one way down. Do FX, because FX you can do both ways, buy, sell, whatever, as long as it's liquid. So what's the liquidity? 7.6 trillion US dollars per day.
Wow.
Yeah, okay. That's the first way, passive income. The second way for passive income is a staking fund. Nothing to do with stocks, nothing to do with FX. It's a staking fund that will pay you 1% per month, which translates into 0.25% per week in US dollars. So
I think you've just created a separate stream of income.
yes, so we have to be creative here, because we can't just sit down here and die and say stock market is dropping and that's it. We can't just do that.
Never heard of it, Ashwin. Never heard of a staking
So
fund.
with this staking fund and the managed fund, you had to earn, you get to earn 2.25% per week.
Wow. And
And
I'm
then you
thinking
have
that
your-
there's absolutely no way that one should attempt to do this on their own.
Yeah,
This is
no.
not like
Please do not try this at home.
look, ma, no hands.
Do not try this at home. I tell you, yes. You've got 2.25% per week, and you've got 20 to 30% per year with quality Asian companies. And believe me,
And you do need
Asia,
professional,
companies.
you do need professional hand-holding in this instance.
Definitely. You do it on your own.
So like the fund managers that you mentioned earlier, they are professionals who know what they're doing.
Correct.
So that we leave it to the experts' hands.
And another thing, you know why they know what they're doing, and you know why they can do it better than you? Because they have a big pool of cash at their disposal, which you do not. They are trading with something like 10 to 30 million US dollars in the bag. You don't have.
So we're like piggybacking on their
correct.
on
you are
their
piggybacking on their
coffers.
large volume and large assets under management. You're piggybacking on that. Absolutely correct.
Okay. So we get to benefit by going with the big boys.
Yeah, you can't do it on your own. In fact, we'll be doing another video to explain to you why we are different from others in the market. It's all about flows. Now that's another separate discussion altogether.
Okay. Well, we're almost out of time, Ashwin. So the first one was buy quality names, and Asian stocks are coming up again because they have bottomed out the interest rate hikes.
Yeah.
And the second one is that fund management system. And the third one is the staking fund. Am I right?
Yeah, that's correct. So you'll get 20 to 30% a year from quality Asian companies, and then you'll get 2.25% per week recurring income in US dollars when you do the passive income side. So it's a whole beautiful package of passive and active income.
I've never heard of anything this innovative. So
I know what you're going to say next. Is too good to be true. If you want to convince yourself, please give us a call.
I'm sure you've got the steps and
yes.
The processes of how to do this.
Yes.
Yeah.
Yes.
So how do we contact you, Ashwin? I
can be contacted at bit.ly/algotrader, which will lead you to our WhatsApp page, because our website, algomasters.com, is still under construction.
Okay. So at least a call that would demystify all these fantastic strategies, like 5% below market, only paying 20% upfront. I mean, wow. This is something to talk about.
Technical, but we deal with equity, interbank equity derivatives to get our clients the best deal, where we buy a stock 5% below what market is paying. I won't go into details.
Well, I'm certainly glad you're doing this for me. I couldn't possibly do this alone.
Well, you can contact us, like I said, bit.ly/algotrader.
Thank you, Ashwin.
We can clear all your doubts.
Thank you so much for today.
Thank you.